Good afternoon. This is Anthony Cherniawski, manager of the Practical Investor LLC. Today is April the 5th, 2009, and the topic for the day is the Standard & Poor's Index finds support. This video is meant for instruction and entertainment purposes only. It is not a solicitation to buy or sell any security. The purchase or sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may wish to consider. You cannot invest directly in an index. Well, hello again. It looks like my potential head and shoulders pattern that I had pointed out about a week ago didn't take place. Remember, the Standard & Poor's Index had to go below 780 in order to trigger the head and shoulders pattern. In this case, it stayed above, and there's a good explanation why. In fact, that's the very reason I brought this up in our last video. Let's go directly to the chart, and we'll examine what's been happening and an explanation for the lack of follow-through on the Standard & Poor's head and shoulders pattern. The reason why is that it had bounced off the 50-day moving average. We can see here, in fact, late last week, we saw that it had come down to the 50-day moving average and had a small bounce, in fact lingered for a couple of days before moving up on Thursday and Friday. Well, the reason why was that it had found support where it didn't find support at the 50-day back in January. You could see that it failed at the 50-day, moved down, and then came back and tested the 50-day moving average twice before moving down into the March 6th or 9th low. So looking at this right now, it says that things could be a little bit more positive, or could they? We don't know that for sure, but one of the things that I want to say is that the 50-day moving average is now a very, very important support area. So chances are very, very good that the Standard & Poor's Index will probably come back down and retest the 50-day again. And if it has a chance to break through, even if it moves back up again, there is the possibility, just the potential now, of the index moving lower, not higher. I just wanted to point that out. The 50-day is a very important moving average, and it tends to offer either support or resistance to the index as it's moving along. Cyclically, we could be in for a pretty big surprise if the S&P moves below the 50-day moving average. So I just want to point that out to you in the next week or two, and be very careful to watch. Right now, the 50-day moving average is at about 790, and it could move a little bit lower than that, but it seems to be leveling off at this point. So we can pretty much count on 790 being our support area. If we see the Standard & Poor's Index move below 90, we could see some real issues. But what may, in fact, even happen is a test of the 50-day moving average and another bounce, and then a test again. In this case, we would have our head and shoulders pattern once again that we could take a look at. All of that is pure speculation right now. We don't know if it's going to happen, but we are heading for some cyclical highs possibly in the next week or so. So let's see what happens with this retest of the 50-day moving average. If it wants to retest, we'll see it fairly quickly, and that would be a very logical place for it to end. Well, I wanted to just review that with you and let you know that this market needs a lot of attention and care. This is not something that we can just walk away from and expect things to keep going in their normal routine. There is no normal routine other than those that can recognize the technical patterns here. So let's just keep in mind that that 50-day moving average at about 790 on the Standard & Poor's is very, very critical support. We want to make sure that it holds that support, and if not, be on the alert for some serious problems coming up down the road. We are, as I said, we are heading for a cyclical high very soon, possibly as early as this week, and from there we want to see the 50-day moving average holding its own for the Standard & Poor's to move higher yet. If not, then Houston, we have problems again. So with that in mind, for those that are interested in following the machinations of the market a little bit more closely and maybe with a little bit more of a technical bent, I am still offering my daily newsletter You can go on my website at www.thepracticalinvestor.com, click on the left heading on the bar which says company, and you'll be able to see under other services description of the newsletter and what we offer. You may also contact me at tonyc@thepracticalinvestor.com, and I'll be glad to send you the information on our daily newsletter. This will keep you a little bit more apprised of what's going on. Let me just say there's a lot of people that are commenting that the market can go higher and higher. In fact, several major analysts are talking about the market going up until September or October of this year. That's yet to be determined, and I think the market is going to be the determiner of whether it goes there or not, and it won't be us. So, as I said earlier, we're at a very critical point from a cyclical point of view, and from an Elliott wave perspective. We may be seeing a potential top, or at least a lesser top right now, and how the market acts after that top is going to be very critical to see whether we go yet higher in the fall or whether we go back down again. So, by all means, do the right thing. Let's keep in touch, and if you have interest in getting a daily newsletter, please contact me and I'll be glad to furnish you the information. In the meantime, good luck and good trading.